Hello and welcome to the Gold, Goats, and Guns podcast for September 30th, 2023. My name is Tom Luongo, and we have a lot to talk about. It is episode 155, and I have back returning for, I think this is the third time, if I'm not incorrect about that. I have Chris Sullivan, the CEO of Hyperion Decimus, a crypto-focused investment firm. And Chris and I are just really enjoy chatting with each other and looking at today and where we are as we close this quarter, as we close Q3 on 2023. To me, it just feels like this is a perfect time to do this. Especially, we were going to do this earlier in the week and I had to beg off. I was just way too busy and overscheduled. But I'm thinking about it now and I'm like, no, actually, end of quarter day, I think, is the perfect time for this. So, Chris, welcome to the show. Thanks for taking the time and doing the thing.
My pleasure, Tom. Pleasure to be here and honored to riff with you here. I think this quarter, and really every quarter this year, is fairly, robust in its various anomalies. Where, I hate echoing this different this time, blah blah blah. But there are a lot of cross currents and underlying autoharmonics with previous historical periods, but we do have also the permeation of quite a lot of new shit. For example, dollar down, gold down at the same time. How's that mathematically possible? Just a plethora of things that I'm sure for folks who aren't in the space of asset management, where we're analyzing every market flows, price, blah blah blah, could be tripped up pretty easily. So hopefully our dialogue can give a little color and fortitude to anybody who's questioning their decision making.
Yeah, I think we really have reached I say it all the time, like, well, here's another inflection point. But from the way I view this, it's funny. I was writing my newsletter draft the other day for Newsmax, right? Because I write Ultimate Wealth Report for them as well, and I was writing it from the perspective of, I feel like someone who comes in every month and tells a short story about the fall of empires, right? And I've been rereading Foundation by Isaac Asimov, and we watched the television show recently, which we talked about in this month's newsletter as well. And it's really been on my mind. And I thought about the format of how Asimov wrote Foundation, which is a series of short stories, which he had to do back in the 1950s, because that was the only way you could really get any science fiction published back then. And today, like, the newsletter industry and the podcast industry is whatnot. It's almost like we're doing that. We're doing this kind of series of braided short stories as we chronicle the events of this massive period of history that's just so weird and but at the same time, obviously ripe for change. And I think every quarter that we sit back and we digest what's going on, especially you in the asset management world, you go, okay, so now the quarter's over. Now what are we doing next, right? So what are you seeing today? Let's talk about it from that perspective.
To speak to what you just spoke to, there are certainly some real pluses, right? Like, alternative media didn't exist when I was a kid, right? Now it's almost being forced into light, because those of us who want truth, even if you're not all the way, I hate the sort of two wings of the same bird, right? I consider myself an Austrian first and maybe a human second after that, and or a father first and husband, But I think that if the alternative media industry can continue to push up against the Davos narrative at all, and then there continues to be a gradual, call it on a log scale, awakening and a hiring of frequency, a hiring of consciousness, then I think we maybe could avoid, I would argue, further genocide than we've already experienced the last 3 years with the pandemic. And then as the last century has gone, we've had basically genocide the entire time in various forms. So I'm hopeful in that regard, because without that vector of interruption, disruption, and delivery of truth-based reporting, and even if it's opinion, right? I just think a lot of people would be left in the dark. And what the corollary is to this in the investment space is everything is so GD narrative driven, and people are not really analyzing it the way I think they should, where literally bureaucrats and administrators have permeated every sector, right? So if that's in where you wouldn't think it would be, the alpha, the capitalist, the go to war, but headbutting and really the hardest space on the planet, to be honest, then we all have to put that into context as we're putting or at least attempting to put the pieces together. I know that
Yeah,
was
no,
long winded. I can drill down from
no,
there.
no. I mean, I think this is a theme, right? This is something we talk about. It's like it's almost become the ethos of Gold Ghosts and Guns at a meta level, which is to say that we have to reteach everybody how to think about what it is about the information that they're ingesting on a daily basis, and to really question, what is signal, what is noise. This is what I know that Dexter White and I talk about this a lot. We talk about this probably more than anything else anymore, because it's exhausting to try and filter out the mis, and disinformation that's being thrown at us in an almost fire hose on a daily basis to obfuscate what's really going on. And so when
Well,
I look at right, so yeah,
and just to point out something that maybe previous cycles wasn't as prevalent as now, is like speaking to noise, price, which in general I would say is the absolute arbiter of truth. When you disrupt, augment, and manipulate the price discovery process, thereby breaking down both correlation and non-correlation of various assets, flows, blah blah blah, you're then forcing confusion where there really wasn't confusion. And you can mark this really when QE began, because no one ever did QE before, right? So
right.
that is different this time. And then we have freaking 19 trillion of negative yields, insane. And you had
Yeah.
valuations of FANG plus Golden 7 or whatever go beyond what even the most bullish analysts would ever put as far as price targets. So
Mm-hmm.
I think humbly putting those into context, and just like creating a signal, you're ranking the importance of them, or lack thereof. All of that is important to contextualize. Just keep your head on straight.
Yeah.
Because what my team does, Tom, and we have fun doing this at our investment committee meetings. We are prepared to argue and defend bull bear base case of every
Mm-hmm.
sector, of every asset, and prepare to win no matter what side we're on. And I think if
Right.
people like just somehow hammer that into their process, it can't hurt you. It's just more awareness. It's raising your frequency. It's raising
Right.
your consciousness and preparing you.
Yeah, and the hard part for making those bull and bear cases is, from my perspective, is when you have distorted prices like that, now you have to start really thinking about, okay, so what's the real driver of the market? Is it what we're taught in first semester college economics, supply and demand, and price and quantity and all this stuff? Or no, it's is it fake assets versus hard assets? No, it's all about policy. It's all about politics. We have markets that have been so thoroughly and completely politicized that that's that's where the real signal is. Because once you
Yeah.
understand the incentives of the people who control the flow of the capital from a policy perspective and are shaping policy, which then controls the flows, now you can understand where they're going to go, where they are, and where they're going to go next.
Well, you hit the nail on the head, Tom. Regardless of the various interventions, manipulations at all, price is formed by two things and two things alone: liquidity and psychology. And if the vector of liquidity is controlled by the same group as is the narrative of the psychology, then there you go. So you're exactly right with how you describe it.
Yeah, I say I tell people all the time. I say it all the time. You've heard me say it before. And when I run into fundamentals based analysts, I remind them constantly: markets don't move on fundamentals. They're informed by on fundamentals, but they move on momentum and sentiment.
I had a conversation with my father this morning, Tom, and he
Mm-hmm.
came from nothing, has a pretty large real estate legal practice, and is in structured finance. Pretty bright guy, a Yale grad, and he's just going through fundamentals. Why this? Why that? And how's this? And then he actually brought up, how the hell is gold down with the dollar down? Like, how's that mathematically possible? And I said to him, I go, look, Dad, fundamentals are a backdrop to make value investors feel good and a backdrop for contrarian investors to act, whether bull or bear. That's all they are.
Absolutely. That makes perfect sense, and when you put it that way. So, when we had a Q3, well, part of a Q3, most of a Q3, where you had the dollar down and gold down. The gold hit the skids, hit a peak earlier in the quarter in the year, and then has sold off for most of Q3. But in the last few weeks, the dollar has done the exact opposite, and that's the interesting part. And I think that goes back to what happened. When we were talking about this, back in July when Janet Yellen went to Beijing, right, and the dollar got shellacked, and gold was getting shellacked. Well, how is this again? How is that possible? Well, it's possible when when powerful political actors put their thumb on the scale of price discovery and make things happen. But you'll notice that ultimately, if liquidity is down, it's because, and if dollar liquidity is down, you can't keep the dollar down. Gold being down is telling you that the dollar was going to start to rise.
Mm-hmm.
And then what did we see coming into the end of Q3?
Yeah, it's despite the noise and the intervention and manipulation, a lot of these internals, meaning the fractals and the pattern recognition, et cetera, is super clean. Gold and oil look a little more messed with, as does Bitcoin. But if you back out, you can still see there's clear, potentially shockingly bullish structures on gold. And I would argue that we're seeing potentially a generational opportunity in mining stocks here.
Mm-hmm.
And we run a crypto hedge fund, but I, as an investor and a human, I want to look at everything and appraise risk reward from there. But I think here you've just got still this anchoring and confirmation bias where people aren't quickly analyzing it and describing it as you just did, Tom. I mean, I know you're quite a bit smarter than most humans on the planet, so you can deduce that instantaneously. But for the common person that watches Bloomberg or CNBC, how the hell are they going to garner that much wisdom if they're being basically programmed as a herd?
Right. Or as I like to put it, gaslit by morons.
Gaslit. That's less PC.
I'm not. Well, there's nothing PC about this, not me or this podcast or most of my guests. So that's perfectly the only acceptable.
PC thing I have is my bald spot right here.
Mine is quite a bit larger than yours. But yeah, when you look at it, like, I'll be honest with you, Chris. One, I agree with you that there is a generational opportunity in both in gold and in mining stocks, because the mining stocks have been beaten with the ugly stick because of rising oil prices, structurally rising oil prices, and the fact that gold is always the first piggy bank rated whenever there's a dollar liquidity problem, because it's the easiest thing to sell. That's why people put positions on the gold futures market, is to be able to pull them back off when necessary. And it's a bad trade, but it's what they do. And we're going to be, I think we're setting up here for both. We had that period you just described earlier in the year where gold and the dollar we had a year-long bear market in the dollar versus the euro, and then and other currencies, and then at the same time gold hits a peak a few months later and then collapses as well. Where that means we're setting up for the exact reverse, where we're going to have gold and the dollar moving up together, and people are going to be equally confused by that.
Yeah, and I think you're going to see, even like we're in our space, the crypto markets, crypto and by measured by the most liquid assets, Bitcoin, Ethereum, its correlation to stocks virtually zero. Correlation to the dollar is down 60%, 68%. So you have just traditional relationships that are completely broken down, and everybody should be
Mhm.
humble enough to go, look, we haven't been in this scenario before, insofar as all the flows are distorted, all the price discovery mechanisms have been manipulated for over a decade and are virtually broken, and then the on and off ramp for fiat, for anything, whether it's futures trading, stocks, crypto, spot precious metals, it's just very difficult to get access to your own capital to make decisions you want to make. I mean, and one of the signals that's
Mhm.
fairly historical, the compression of the promote on spot, or the commission on spot, or the spread on spot, is now down to, I think, 9 or 10 year lows. And historically, when that's happened, it's before a huge short squeeze.
Mhm. That makes perfect sense. When you think about it, people are just they've been rating the way you look at it is another. What you said is another way of looking saying what I said, which is that people rated gold, their positions on their long positions on gold, as piggy bank in order to get dollars that they needed more. And when I'm looking at the way this Q3 is ending up, and it's ending up almost exactly the way I one hoped and two expected, which is that the euro is getting thrashed. Lagarde is losing control of the European bond market. The long end of the yield curve is the U.S. yield curve is rising, which is forcing everybody else to lose control. And the response to that has been Janet Yellen announcing yield curve control. The Bank of Japan is having to back off. All of these things are happening at the same time, and yeah, what a shock! We're hearing, the we're seeing the underpinnings of margin calls happen all across the space, all across multiple currency and bond markets.
Yeah, I think people should be, and I might be wrong. I'm not saying I'm a great predictor, but I think you're going to see the early innings of a big bear steepening, or perhaps a very volatile bear steepening, begin to occur.
Mm-hmm.
Um, the shutdown, plus or minus, affects everything. I mean, I think, government shutdown, great. Uh,
Right.
get them off our backs for a couple, even if it's just mentally, let alone physically or
Right.
financially. But the thing that maybe scares me more than in the past is that we really have, Yellen included, the most inept and corrupt combination of individuals dictating policies. You've
Mm-hmm.
got arguably a lone wolf in Powell, and I know he listens to Bullard too, who I happen to admire, even though he's a bankster. Um, you know, essentially the only ones standing up for us. Now, I'm for the end of central banks, a la Ron Paul, a la Thomas Jefferson, a la Andrew Jackson. However, we're not prepared to handle what we've already been through, where 30+% of commodities are trading in local currencies like rupee and renminbi, et cetera, because
Mm-hmm.
of the BRICS. They haven't issued their own settlement later, which probably is Bitcoin or some version thereof,
Some version
at
thereof.
least as collateral. And it's always careful what you wish for. Like, okay, I get a lot of these newsletters too, Tom, and everybody's ended the world. Oh, CBDC. Well, guys, they're 2 years behind a retail CBDC if they're lucky, because yes, Microsoft has most of the infrastructure for the Fed now done, but yeah, try and teach your average uh, welfare recipient how to use a crypto wallet on their phone.
Right.
Like, they might do a bail in, but they're not going to roll out the CBDC
Nah.
before they have the ability to do so. So I just want to put the maximum fear and maximum both things in context, so
Yes.
that there's a clearer pathway to good decision making.
Well, what's interesting about this, I was talking about this morning. It popped up on Twitter. One of my followers on Twitter reminded me, "Oh, by the way, did you notice that Lagarde, who was all adamant that we were going to be issuing a digital euro in October, now has to put it off for 2 more years?" That was Lagarde at the ECB, and
Right,
she's
and
like
they're
Miss CBDC. Like they have to do this to get to if they're going to get out from underneath their debt bubble, their debt problem, which is that it's all
well, there
unbelievably overpriced.
well, but there is an option I haven't heard discussed too much. If there's the political will, you just look the central bank in the eye and you say, sorry, we're defaulting on the securities you own.
Mm-hmm.
We're honoring all of our foreign investor and retail investors' bonds. And hey, you want to keep being central bank involved in the process? write it down. You're already at net negative trillions anyways in
Right.
balance sheet terms. So if they were an actual business, they wouldn't get to run, notwithstanding they can conjure money, which should be, illegal, unethical, et cetera.
Right.
And I think that smarter politicians, like let's say we get a Michelle and Newsom ticket, he may be bright enough to do that to save his own hide, right? Because that guy has a track record of acting like that.
Mhm.
So I just think being prepared for any and any FUBAR reaction, any and all FUBAR reactions is prudent because the central banks don't know what they're doing. I mean, they're an echo chamber at best. Powell is by himself trying to single-handedly hold up the dollar
Mhm.
and take some control from Washington, take some control from Davos. But at the same time, like there's only so many levers he can pull, and he's kind of pulled
Yeah.
them all.
Yeah. Agreed. He has to have. I don't believe that Powell's acting on his own. I think that he's acting. And I've said this before, and I know you've heard me say this, which is I believe Powell is the tip of the spear. He's the vanguard of what the commercial banking lobby here in the United States understands, which is that okay, we're done. We're done fleecing the Muppets for domestic Muppets for everything we can get from them, and then shipping all the money overseas. We have to rebuild here, and the only way to do that is to stop shipping the dollars overseas, and then that's what's going to happen. And the reindustrialization of the United States has to take place. It's going to do so either at astronomically higher prices, overall, either, as Ron Paul's always said, hyperinflation and hyperdeflation are the same side or two sides of the same coin. Doesn't really matter whether you have prices drop by 90% or inflate by 90%. You can go either direction. The crux of that is how it's valued relative to hard assets, to assets that can't be counterfeited, i.e. Bitcoin, i.e. gold. So you have one of two options. You can either keep the price of gold at $1,900 to $2,000 an ounce and deflate all the credit markets, or you can allow gold to reach its a natural level of, say between $10,000 and $15,000 an ounce, and write them.
20,
And
24,000 is intrinsic.
okay, everybody can pick a number. Right? It doesn't
Well,
really
no,
matter. I'm not arguing with
Yeah,
you, Chris. What I'm saying is it doesn't
right.
matter what the number is. The number just has to be much higher. And the way you get there without collapsing all of these institutions and all of these systems is by throwing gold properly, like you're supposed to, out on the freaking yield curve, as Judy Shelton wanted to do when Kamala Harris and John McCain high-fived on the floor of the Senate to stop her nomination to the FOMC board. What she wanted to do was issue 50 and 100-year U.S. Treasuries tied to gold, with a 5% gold redemption clause. That was the part that Mnuchin left out of the public discussion of 50 and 100-year bonds on purpose, I might add, because that concept would have upset everybody, because if that had made it into the zeitgeist, everybody would have went, yeah, that's a great idea. Oh my God, the
Of
United
course,
States can get out from underneath that. So,
it was such a good idea. I mistakenly believed that it was going to go through because it was so brilliant, so logical, so easy to execute. Meanwhile,
yes.
fast forward to now, I think the rate of change of tons purchased by central banks is gone through the roof.
Mm-hmm.
And you've got, to speak to your point about the reshoring of manufacturing in the industrial base, part of that is going to be accomplished by the gradual bankrupting or accumulation of all of the regionals into the Fed member banks to wield that weapon the way they see fit. Now, it may benefit us in the long run from onshoring all that capital back, but they have to get, they've achieved some level of it beginning in 87 through 89, the savings and loan, and then 08, and then now. But there's going to be another round of this, perhaps even before the end of the year, that consolidates it to the Fed member banks. I personally don't recommend a lot of people keep much capital in banks here because the macroprudential risk is bail-in, not, oh, my Amazon stock's down or my Exxon stock's down. It's hey, my capital's gone.
Yeah, my capital's gone. That is, I worry about those things. I worry about it more if I lived in a country that didn't actually have, like, okay, I say this with tongue firmly implanted in cheek, which is the following. I live in a country, or you and I live in a country, and certainly live in a state with the rule of law. And I'm using my air quotes here. the and that and that rule of law also is backed up by the 800 million guns that are owned privately in the United States. If they attempt any kind of great taking or bail-in process here in the United States, that the banks just think they're going to take all the friggin' assets. Like Larry Fink thought he was going to take everybody's single family home after he bought them with 0% money via the CARES Act. I got news for you. That didn't work out so well, did it, fuckhead? It didn't. So I'm speaking to Larry Fink, not to you. That fuck nugget didn't get anything out of that. What he's doing now is he's having to back off completely on that plan because that process is over. And because everybody understands that under no circumstances are the American people and or the American banking system going to allow that. Why would they do that? They need to do it in fucking Europe, where no one has ever had any friggin' legal rights to anything. Okay. Or in China or in Russia or anywhere else in the world where there isn't even the nominal understanding that the people are superior to the government. We may not have that de facto, but we still have it du jour, and we still own the assets necessary to make de facto or de jure de facto again. Everywhere else doesn't. And this is a very important point about why people should not cheer the end of the United States, because you've been gaslit by a bunch of fucking British assholes into believing that we're the evil empire. When the truth of the matter is that they're the fucking ones that have been doing this shit in our name for over a century now. And this is the thing I cannot get through. I have to get through people's heads. We're over the target on this. The more I talk about how evil the fucking British are, the more shit I get. Done. Getting flack, you're over the target. And like, this is the thing. And once we understand that, Chris, one last point. Once we understand that as our baseline, now we can understand that maybe the United States is actually declaring independence finally from the vestiges of their colonial overlords.
Like, there's tons to unpack there, Tom.
I know.
I would argue, I'll be a pain in the ass. I would argue while you mean City of Vatican or City of London in your British, the common folk of Britain are just as victimized and predatorized as we are. So ethnically, these are quote unquote globalists, right?
Yes.
And the three city states are where they're City of London, DC, and Vatican. And guess what? It's at minimum goes back to 1740s when these groups of people and their families started running shit as New World Order globalists, and accelerated in 1913. And then it's certainly possible and probable Powell is his own man and he's working in construct with Wall Street. There is the chance that the BIS pulls the levers away from them at some point.
I think the BIS is. I'll be honest with you. I've having talked to Vince Lanci about this recently, and the more we talk about the BIS, the more I think about them. I really think that the Bank of International Settlements is becoming Powell's bitch, and they're becoming Xi and Putin's bitch as well. And I'm saying this with no amount of irony.
From two different angles.
That the world is re-regionalizing. And we're going back to 19th century style mercantilism, and the BIS is going to be allowed to be the conduit by which we talk to each other, but they're going to be completely separate systems at the functional level. There'll still be international trade, there'll still be international settlement and all that, but as far as like hard assets moving around the world, the gold isn't moving, and the BIS will be allowed to be the vestige of this old system, and that's going to be it. At the end of the day, they don't control the PBOC. They thought they controlled the Bank of Russia. They're finding out that they don't control that either. And they don't control the Federal Reserve. And so, and they don't control, and they may or may not control the UAE and the Saudis at this point, who are also acting as if they understand this game at this level. And because once you understand the game at this level, you can neuter all these people. You can neuter all of these institutions in a heartbeat by ignoring them. By doing the classic thing that everybody just does normally, which is, oh, by the way, I'm not paying that parking ticket. Sue me.
Right.
Go find me.
Yeah.
Or here's my jingle mail. Evict me from my home. I'm ignoring you and I'm going to move on with my life. And at some point, the stroke of the pen, law of the land mentality that these fucking people have is irrelevant if they don't actually have the ability to point guns at us and make us do anything.
Well, but what I don't disagree on the premise, but what about you? You're aware that there's the USA Inc. and what
Oh
our
yeah.
what our birth certificates and our social security numbers
Yeah,
do.
I am.
Battle. So, would you argue that that would have to be relitigated or upended to achieve that independence from the whatever word you want to call it, global cabal, New World Order,
Mm.
NATO, blah blah blah. They have
I
many
just
names.
I just think that at a certain level, they're just going to look at them and go, "Yeah, that's nice." Trying to enforce it. I just don't like international law is breaking down. International agreements are all breaking down. Like again, they
Well,
want to litigate this up in courts. They want to play this game. Come here, please come here. King Charles, you think you own my shit? Come and you bring the gendarme and take my freaking land. It's not going to happen. What's going to happen is that the Columbia County Sheriff's Office is going to come to my house and they're going to look at me and go, Tom, I got to throw you out of your house. And I'd be like, no, you're not, Jerry. You know, you're not. So what's going to happen is we're going to look at each other. I'm going to invite you into the house. We're going to have a cup of coffee and then you're going to go home. That's what's going to happen. And once
well,
that
we've already
get to
seen
that level, all the paper in the world doesn't matter. This is I think the very important point.
It definitely doesn't matter, and you are right. The legal premise with which we've become chattel after the Aldridge Planned Federal Reserve Act is admiralty law, which is breaking down by the multipolarity explosion that's happening. But I also think that you've got one sample currently of what exactly you said. Like what happened when I think it was New Mexico governor went all full retard commie and said no guns for
No guns.
no guns and no concealed carry. And then what did the sheriffs do? Or at least a couple of them said, "Go after yourself. We're not enforcing that."
Yeah. The attorney general just said, "I'm not enforcing this law, so it's wrong."
And I do think, despite what people watch on mainstream media, and even Newsmax does a good, and even InfoWars or Natural, all these nice alternative media platforms do a good job of exposing the gaslighting and the lying. But for the commoner who is force-fed MSNBC, CNN, and Fox, like I'm not a fan of Fox either because they're just a different version of the same bird. They think that there's this great divide amongst the humans. They see looting in Philadelphia and people need to eat and not realizing that while yes, if we underwrite the statistics, the Biden administration has fudged every labor number, et cetera, and inflation number since then. But it's not like that's the first time that's happened. And then largely to argue contrarian against the end of the world thesis, largely our economy is intact despite all of the Davos stuff, right? Like I'll make the bull case for econ and stocks here, for example. The bull case is on the economic front, it appears that both the PCE side is in the right direction and the durable goods have bottomed. And we're going to see ISM looks like it's about to turn up. And so you've got all of these data points that look like they're at least call them cyclical lows. Then you have the very real issue of we had the highest rate of change of interest rate increases ever. I don't think they're done. I think you're going to see a 7.5, 10-year at some point, maybe even higher. But we got to have a pause, which could be 90 days, 6 months, could be 2 years, right? Because we're not going to go from a 40-year declining rate cycle into a 18-month rising rate cycle. That's not what just happened. We are now in a secular rising rate cycle that's going to be at least 5 to 7 years long, at least, right? Agreed. And that does us all a lot of good. It's not something to be afraid of. So look at stocks. The S&P actually did a classic ABC correction. Now it may turn into something deeper, but it retested the May breakout. It created a breath. There was a lot of max oversold. You had bearish sentiment confirmed by hedge fund positions at max short. You had the VIX have a muted but nice pop and maybe a retrace that's maybe even buyable short term because of how fast the retrace was. And we've had a rolling bear for let's see about 15 months.
Mm-hmm.
And that's corrective, both psychologically and price. And it's been starved of flows. So
Mm-hmm.
you could argue that, hey, for a quarter, 2 or 3, we're going to see a cyclical upturn in fundamental data and a rebalancing and rally in stocks, forgetting that the buyback blackout window just ended. They're all buying back the stock. I don't agree with it as a policy, and I don't want to invest in stocks that do that. But they're not going to not do that, right?
Mm-hmm.
And that's your bull case for not the end of the world, right?
Right.
And surprisingly, we got to 5.5 Fed funds. We haven't really broken anything yet.
I know. And maybe that the whole
That's not bearish. That's bullish.
I know it's incredibly bullish. I know. And this is the thing that's everybody was like, if we go to 1%, the Powell's gonna have to pivot. We're gonna go back to the zero bound because the whole world is gonna collapse. I'm like, you do realize that you have no idea that that's true, right? I'm not saying you're wrong. I'm just saying I don't think that's the case. And I said in the beginning that even if something does break, that Powell had both sides of the balance sheet for the market. Chock full. He had liquidity on one side and he had collateral on the other, and whatever the banking system needed to keep things moving, he could do. And what did we see happen? He raises the 5.5%, $1 trillion or 1.1 trillion flows out of RRP, reverse repos, into money markets, not into money markets. Yeah, it's out of deposits, bank deposits, and the banks have got, as Danielle DiMartino Booth said to me, Powell wants the banks to raise capital. He's not bailing them out. He wants them to raise capital. They're refusing to raise capital, but that's okay. Like the money's flowed out, the deposits, Zero Hedge like writes doom porn every third day about how deposits are collapsing. Yeah, but they're moved in the money markets. He's moved everybody into short-term treasuries and into money market funds where we're getting paid. Right? While the banks are stuck offering still 0.1, 0.2% on passbook savings because their balance sheets are impaired. If they raise capital or they get rid of a bunch of their, or if they start liquidating their commercial real estate crap, then their balance sheets will improve and they can go on and they can start offering competitive rates again. Like this is what's supposed to happen. The banks aren't supposed to always be bailed out because they got themselves into trouble. Like, sorry, the money's moving back to Main Street.
You're right about repo. That was the bailout that began in August of 2019 to bail out the Wall Street center banks, right? That was one version of a bailout. And then the BTPFD, which I think made
the BTFP is not a bailout program.
No, but it's a program to identify who they're going to bankrupt next to roll into Jamie Dimon and Citigroup and blah blah blah. That's what it is.
That's one way of looking at it. The other way of looking at it is, and maybe that's the case. I don't think Jamie Dimon wants the credit unions in Florida, for example. I don't think he wants to invest in building, as I've said before, building libraries in Palatka. What he and Powell want is to identify which of these fucking banks have been selling out the United States through all the funny money, through the money going out and then coming back, and all these onshore shadow banks that we've had that are really Eurodollar banks. Those are the ones they're trying to identify and get rid of. Those are the 4 they got rid of in March.
No, well, Silvergate and Signature were solvent banks, and then they got rid of Silicon Valley.
I didn't say they weren't solvent. I said they were Davos fucking oligarch banks that needed to be liquidated because they were
Tom, you're saying a 100% crypto bank in Silvergate's point. Now Barney Frank was the head of Signature, so I'll leave that one out. But Silvergate was a fully crypto bank.
Yeah.
So how is that
crypto and crypto is in so many ways, Chris, stable coins are just Eurodollars.
Oh, well, no, I've said that on record. Not in so many ways. They are.
I mean, unless I'm missing. I mean, I may be missing. Okay, I'll be honest. I'll be fair. I am positing this, and if there is real evidence to the contrary, but to me, the Fed is in no way, manner, shape, or form going to allow any other stablecoin, U.S. synthetic dollar stablecoins, to exist other than the ones they approve of. Because their goal is to destroy the synthetic dollar market and have them be in control of the dollar and the price of dollars. And you do that by getting rid of all of the all of the electronic versions of the dollar. Now, in my mind, and this is why I keep coming back to this, I can continue to think that Tether is the one that was chosen as the liquidity half of the Bitcoin market. And to allow Bitcoin to continue to be liquid, they had to leave one stable coin. And if the one stable coin is Tether, which actually has a bank account full of US treasuries, as opposed to the other ones, which are full of magic beans, well, then, and the Fed controls Tether, then yeah. And I blew this by Caitlin Long six months ago, and she just looked at it. She screamed into the microphone. She's like, no. And then it's still looking that way, right? Well, I'm going to talk to Caitlin in about two weeks, so that one's going to be fun. So,
well, the analysis is correct, but I know that team. They are not.
oh, okay.
Yeah, and
they weren't the bad guys. They were caught in the crossfire.
So those are loaded terms, right? Like I'm not a fan. Let me just blanket statement. I despise stable coins because they are antithetical to what I'd like to see, which is no more fiat, right? I want commodity backed currency on blockchain settlement against Bitcoin collateral. It is a trustless infrastructure. The problem with this system and the problem with any of these centralized systems is it requires and mandates and enforces trust, which isn't there. Like if you ask any, hey, you trust Wall Street banks? Well, no, Chris, I don't. F them. Hey, you trust your politicians in Washington? No, well, fuck them, right? Hey, you trust Rachel Maddow
Right.
on? No, F her. Yeah. Okay, so if we agree that there's no benchmark or metric worthy of our trust, then why don't we get off of that crap by choice? And so it's through that prism that I've underwritten. I actually like some of the algorithmic stablecoins because the math is pretty fantastic. Not one like the one that blew up Luna, but DAI, for example, is a cool example of that. And then when I was studying blockchain at MIT, I actually conceptually came up with a quantum computed stablecoin that would act as like a rates swap token or like on and off ramp, because there's all this cool stuff that you can do when innovation technology is unbridled and decentralized and open source, where no one has to trust anything.
Right. Agreed.
And then with zero knowledge proofs and all of the interoperability, shared security, you've now got the tech that can actually change the planet already ready. Like it's off the shelf, ready to go.
Right.
So to Tether, while I don't like stablecoins because they perpetuate the dollar at all, and by buying treasuries, they are buying favor with the Fed. The team and the willingness to be audited or at least semi-audited and represent the holdings and update, create, redeem issuance. It's as transparent as you're going to get from potentially bad actors, Tom. And then they're definitely crypto native. All of the interest they're getting on Bitcoin or on treasuries, they're literally buying Bitcoin and are slowly transitioning to the world's, what I think will be the world's reserve asset or one of them in Bitcoin.
Mm-hmm. And that's all great, Chris. And in no way am I arguing with you. I think when I lay out the case the way I have, it is I'm looking at it from no one ever makes the Fed's argument. Everybody like loves the shit on the Fed. Even the people in mainstream economics like to shit on the Fed. Taking the opposite, not because I'm some kind of Fed shill, simply I'm like, it's my job to always flip the script and look at things from the opposite perspective. I'm not a Russia shill. I just for years looked at American foreign policy from Russia's perspective. So making the argument about why the Fed would do what they've done, that is something that we all have to go we should be willing to do. And then argue, okay, well, if those incentives line up, is that it's not necessarily the end goal. It's not an end game that I'm describing. It's the current state of play.
Right. It's an intermediary transition period. Right. And you pick the enemy of my enemy is my friend. And to your point, like, yeah, they may be the evil masters of the universe, right? Mm-hmm. But at least here they kind of see the forest from the trees going, well, we can't let this happen now or else, right? Well, we fully can't kick the can down the road.
Right. Well, they're just an organization, right? That whose first and last operating principle is survival. Like I view every organization this way. as Butler Schaefer very famously put it, I distrust all organizations bigger than a two-handed game of
let's
poker. Right? I mean,
let's have even more fun with this. Let's let Yellen and AOC and Maxine Waters play that role now. You're going to feel better about that?
far worse. Of course.
Right. I mean, it gave me chills even saying that.
Right.
You know,
Exactly.
for all of their faults as employees of a vampire squid,
Mhm.
they're still human beings, and you still need talented human beings to make less bad choices and make less mistakes. And if anything, you know, we have this shutdown here that I would attribute and thank Powell for, because look, if rates were zero, the continuing resolution would already be.
Yeah. No, we would the United States would already be over legally as a thing if the rates were the zero bound. So yes, Powell has forced the moment and given Matt Gaetz the ammunition necessary to stand up to Kevin McCarthy and start the process of trying to
Yeah, and
actually
how
effect
about
a
that?
revolution against the city state of DC.
And commend Matt Gaetz. Not always been a personal fan, but the substantive quality of how he's maneuvered, argued, and literally represent all of us as human beings and Americans first is very impressive to see. Because I'm sure you're a little bit more senior than me. All you've had is your heart broken with hopeful, talented politicians, and so far, I've not been let down by him. I mean, whether I saw a piece where he was grilling generals on, coups in Africa and stuff. You're like, whoa, dude, look at you. Um,
Right.
because all of us are against proxies, let alone blowing our money, killing people that we don't authorize. Like
Right.
it's all disgusting. And it is the sort of Davos, City of London, Washington cabal, because it's all the same. Like,
Well, but even then, I even bristle at that at this point because I really do think that everybody's realizing that the old cartel of fuckheads, they're losing so badly they're now starting to turn on each other. And that's the interesting part. Chris, right before we sat down to chat today, I looked at the Slack server. I ran through, looked at the geopolitics forum, and what did I see? General Milley is stepping down from the Joint Chiefs of Staff. Now, Milley was put in place to destroy Trump, and he was put in place to affect Ukraine, to create Ukraine and create this mess. And so, DiFi dies this morning. 2 hours later, Milley steps down. 4 days ago, they're going after Adam Schiff. Like, something's happening here. As Dexter White and I like to talk about all the time, manila folders are hitting the freaking table, and they're not empty all day long. Something's happening here.
refreshing to see, because quantitatively, Tom,
Yeah.
I it's hard to paint a long-term bullish view if we don't
No.
revert back to human and American values, right? And decentralize, right? You
Right.
can't have the world run by a dozen or two, fascist government and oligarchical corporations that through their NGOs and their WHO and their this and that and NATO and all these supranational bullshit organizations that steal from the common taxpayer, that just it reaches its capacity at some point. Now we may have another round of it before we're.
I know. Pete, remember this is an audio podcast, so we're responding to each other's facial expressions, and I'm like, I don't think so. I think this is it, dude. I really do think this is the big one. When this one breaks, then all of the things that you just talked about in terms of the technology to lead us to a better trustless system I'm glad it's there. I'm glad, because I think that we're in that moment where the system that is dying today is going to die over the course of probably the rest of your lifetime. I probably won't see most of it. And then by the time we get there, then then all the Bitcoin maxis on Twitter 40 years from now will go, that Luongo guy, I told you guys, Bitcoin fixes this. I'm like, yeah, it did. And I was right then. I said, it doesn't fix this right now. That's the thing. We have to make sure to get the order of operations.
There's such a evangelical aspect of this, and I was guilty of it too. Like when I first read the white paper, I was putting together all of the Austrians and then the Adam Smiths and the John Knox and the Andrew Jackson, all of that
Right.
awareness into, oh my God. And then realizing that, okay, even 11, 12 years later, I've got a dashboard here. We've got Bitcoin addresses with greater than one Bitcoin straight up and to the right,
Yep.
all-time high. You've got long-term holder supply all-time high, short-term holder supply below 2014 levels, meaning no speculators.
Mm-hmm.
And yes, they've largely papered into the market with these futures ETFs that they can wildly manipulate. Yeah, but you got to forecast they're going to do that to get their control and get their VIG, right? They're going to do
Sure.
that. And then they're very real um, tech apparatus that can deliver Wall Street and local banking services and transaction processing that is DeFi. And then, dude, the Lightning Network, and again, I always like to balance bull and bear, but I like statistical measurements of fact.
Mm-hmm.
The Lightning Network on its ability to process transactions has now exceeded 5 million per second, which is literally the 4 big credit card companies put together.
There you
And
go.
guess how much that cost? 0.0002 versus 154.2 trillion B2B payments at an aggregate gross cost of 6% globally. Just that alone, changing the settlement layer to a trustless settlement layer, adds 325 bips to GDP instantly globally by just giving people money back. I've had experience recently with the capital controls in Colombia where we've had a Western Union, my father-in-law, money, and it's like 26, 27%. And if he wasn't mid 70s, I'd be like, here, I'm going to send you Bitcoin. But
I spent most of the last year kind of going to war with the Bitcoin maxis simply because I don't like religious fundamentalists of any stripe. And maybe it's an overreaction on my part because I used to be a gold bug, really, religious fundamentalist. And I'm not going to, but it's just important that everybody understand that that you can't expect the empire not to strike back. And I'm not saying that the empire is going to win, but the goal of discussion about most of this, because look, 90% of the Bitcoin discussion is about the end game, right? The revolution, the throwing the emperor down the well and all the rest of it and blowing up to the second Death Star. But how do you get there from there? This is one of the problems with storytelling, and you have to go through. Sometimes you can't just tell the important moments in the story of when it turned. You have to tell the whole story. We exist here in 2023, and the truth of the matter is that gold bugs have been wrong for 20 years. They've been right in theoretically, they've been wrong practically. And they've actually done a disservice to the entire segment of the marketplace because now because you've been so thoroughly wrong, why would anybody listen to you?
Well, no, it's funny, and that because I've seen that too. My whole adult life, which began in 2006, Morgan Stanley is actually where I started working, and you burn people with that thesis. And once it gets enough people to lose whatever the threshold's typically about 30% ish, right? People give up, don't pay attention. And now we're at a really precarious position because I would argue, my generation doesn't give two F's about gold, where I'm buying, 10 units of Bitcoin and 2 units of gold and 2 units of silver, right? When I'm saving my fiat in putting it into asset, that's how I'm distributing it. I don't give a shit about about the current price in fiat, because if you're deploying capital in that way to accumulate, first off, you want it lower, right? Number one. And then second, it's immaterial. And then I point out to folks, well, look, since pick 13 or 71, the dollar's gone down 11.24% in purchasing power every effing year. That's your VIG. So the 8 that the stock market's done doesn't capture that. The 4.56 that treasuries have doesn't capture that. So what are you going to do? Well, you got to do a mix of stuff, and don't be an idiot at the top and don't be an idiot at the bottom. And here, I see all this oh, we're going to rip to 5,000 from some analysts, and then, oh, it's going to go to 2,600. Yeah, those technicals could be triggered both directions.
Mhm.
But reality of it is like the consumer has already been blown away, right? What happened? In the 70s, we began offshoring all the jobs. Okay. And now everybody's using credit cards to get by. All right, that's at a maximum level, but they can just BK and it goes bye-bye. So can the federal government, if having the will to go, look, Fed, you have 9-10 trillion. Sorry, we'll start over.
Yeah, we can start over.
And that's actually what gets the central bank to stay around longer instead of it just nuking in everybody's face. And I would argue the public, as much as I love them, do not have the education and wherewithal to actually understand what is nuking and why, if it were to occur. Because the canary in the coal mine is the unraveling of the credit markets at a speed that cannot be controlled by the central banks.
Right.
We have not hit that yet.
Hmm.
And we've absorbed a ton of correction and credit crunch and tightening. Although financial conditions by our quant are not actually tight, they're still in the easy quotient or quadrant.
Yep.
That you have to trade in front of you. I'm not a maxi of anything other than freedom, Tom. And I buy gold and assets ad nauseum because only an idiot would not accumulate assets.
Right.
But I also trade what's in front of me.
And what's in front of us is a bond bear market. And it's not going to be a bond bear market that everybody wants this to be a bond bear market that lasts 18 months and then, rolls over again. Go look at a 50-year chart of the 10-year US 10-year. And everybody's been trading or been commenting on this as if, oh, well, every time the bond vigilantes like start to sharpen their batarangs and maybe put some gas in the Batmobile, then the Fed comes in and beats and beats the hell out of them, kills Robin and sends Batman into a 20-year depression. Or this time is actually different because we have a Fed that is not complicit with the globalist Comintern. This is the thing. And if you wrap your head around that, then you also get to wrap your head around the idea that Bitcoin gets to now fucking operate in a space, a headspace where the Fed is actually defending itself as opposed to committing ritualistic suicide on the altar of globalism.
You think it's a coincidence that Gollum at the SEC and the Fed agree that Bitcoin's a commodity? I wonder why that is, Tom. What do they have plans for next? Oh, we're going to pay all this paper Bitcoin. Oh, look, it's suppressing the price. We get to slowly accumulate billion.
When Bitcoin futures, when off-chain Bitcoin futures were announced in December of 2018 and started trading, I'm like, to December of 2016, and they started trading. I'm like, the high will be in about a month. I said this back then. I'm like, they're going to do to Bitcoin what they did to gold. And there's no reason for Bitcoin off-chain settled Bitcoin futures any more than there's any need for dollar settled gold futures. Neither of these assets trade where they need to. They are money. They're as Vince put it in the last episode of the podcast. Gold's future value is interest rates. Same thing with Bitcoin. It's not based on a promise to deliver a certain amount of gold in 6 months' time. The only people who need that are the friggin' coin dealers, and they can get that. They can make those deals directly with the mines, right?
Right. Like Freeport and Barrick and BHP are open for negotiations. I think you have to be at a certain tonnage, but more power to them. And usually, think about what you just articulated. Like if I don't trade the futures, but think about what you just said. In order to yield a result on my trading thesis, short or long, right? You make a series of trust assumptions, right? Okay, you're on the LME. You have to trust the LME to execute. Then you have to trust the LME's tech to confirm that and show that in your brokerage trading or whatever way you're trading through. Then you have to trust if you're on the other side and you're going to take delivery or you're going to cash settle, the spreads are calculated correctly, the tonnage or the weightage calculated correctly, the addresses are marked right, you know what the shipping costs, blah, 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 blah. And then on top of that whole thing, this should make people quiver. You have to trust that they have issued or redeemed the appropriate quantity of futures. So I just now, while I agree with you, you're not just going to go poof, here's a new system, right? I just can't fathom why people can stomach participating in this system blindly for so much longer. Like, the right left paradigm is not a right left paradigm. It's a,
No.
we're going to divide and conquer you coming from your frequency here and your frequency here, and you idiots are going to let us get away with murder at all.
Yes. No, I understand that. Like this, Chris, it's like everything else. It's going to be a process simply because, you know, it's there. You're trying to change an entire financial system that is. It's like the easiest metaphor for this. You're trying to turn the Titanic around in the Suez Canal. It's possible. It's going to take a while. And you don't, there's so much bureaucratic inertia. There's so much, there's so much legal inertia and all of these things. As we talked early, there's catastrophic moments where everybody will just put their fingers up in the air and go, you know what? No, I'm not complying with that. But that's only when it's extreme. They're going to take my house. They're going to, the bank is going to, they're like all these catastrophic bail-ins and all the rest of it. Like, yeah, you think that's going to happen? You can have my $5,000 worth of savings and now you're dead. Was it worth it? Because that's the reality of what's going to happen if you do that to enough people. Someone is just going to turn around and start shooting bankers and politicians and cops and everything else. And is that the world you want? And is that the world that Davos wants to rule over? Do you really think that they're going to be spared that when we can see them now? Of course not. They're beginning to see the fact that everybody is becoming long guillotines, rope makers, and lead futures. I've added lead futures to my thing because you should always have three. You should always have three in a list. So guillotines, rope makers. But
now, as a free market, advocate, if commercial hedgers should have a means and methods to hedge, but one of the signs that almost no one should trade this paper BS is like the big energy boys stopped trading that stuff back in 2011 and 12 because of its ability to actually hedge their input cost and their forward sale. So this is all just speculative BS that ultimately you'd argue is part of the price discovery as manipulated is that will end up in the same place, just temporarily create more chop and more noise.
Well, I think it's part of it. I just think it's part of the control system when you create a flood of dollars that you can lever up to the tits, to the hilt, and you control the news flow and you control the perception of what's going on. Dude, I'm seriously, like you can manipulate price far beyond its actual, where the supply and demand fundamentals, for example, can operate and clear. And then you reach a moment where you get maximum craziness, like we've seen in the oil markets this year. At the beginning of the year, oil was in a supply deficit. And yet Janet Yellen was putting a price cap in place on Russian Urals grade. And they were bombing the price on Brent crude, on international, on ICE and everything else to try and put a cap on the price. And eventually the Saudis and the Russians kept cutting production. OPEC kept cutting production. Eventually everybody was like, oh my God, we're 3 million barrels short a day. Like, yeah, we're 3 million barrels short a day. And now no matter what they do, they can't stop the price of oil from rising.
No, it's scary. That chart, I mean, when Goldman puts a target on something, they kind of make it a self-fulfilling prophecy. Like, wait a minute, Mr. CEO Sullivan, I thought you were, woke, New World Order, social justice guy, but now you're saying to all your big boy clients, buy the F out of energy and energy products, energy shipping, et cetera, because we're going to 150. Now, 150 would be a blessing, Tom, because people are not cognizant of the fact that our strategic petroleum reserves have been Davos depleted, as I like to say, purposefully. But the bullish side is, you forget that most of the energy complex are like humans like us, like rule of law, family values, capitalistic principles. They can flip that shit on at the blink of an eye. So in a very effed up and discombobulated way, we may end up getting the result that Trump started to get, where United States is a little walled off from trade, but we create and produce everything we need internally.
It's going to take generations to destroy. It's going to take rational fiscal policy, throwing treasuries down on the yield curve. Powell's staying between 6 and 7% in the Fed funds rate for a significant amount of time. He may go up to 6, come down to 4, and then go back to 7 right before he leaves office in 2026, and somebody else who's not a shit lib takes over. And then, well, I mean, there's a path out of this that no one wants to admit because everybody wants to be right, that everybody is falling over themselves that the dollar is dead. But at the same time,
to be fair, the dollar died a long time ago. It died in 1971, died in 1913. So it's not just going to disappear as a medium of exchange, you morons. Like,
it's still going to be a price. It's still going to be the price settlement layer. It's still going to be the thing we quote in. But again, everything will be the collateral underneath the system will be gold and Bitcoin.
The U.S. consumers 60-something% of the goddamn GDP of the planet, anyways. You're gonna say, oh, Indonesia, Africa, all the commodity producing nations are just going to go, yeah, we don't have no dollars. Now, the pivot to the BRICS, that's a anti-Davos, anti-petrodollar move, not an anti-American people move. Like
exactly.
The bastardization, corruption, and debauchery of our nation has already occurred.
Yes,
we can get worse, and certainly if they integrate more smart city corralling, like it will get worse. But I think we're troughing in the maximum of what's tolerated, right? And you've got a lot of examples of that. And then the vast majority of folks are good folks that just want to be left alone. And I think that we have to put all these maximum bullish and bearish sentiments and really just theories in context. You know, like the corporations.
Go ahead. No, go ahead.
One of the most disruptive things that's going to happen corporate wise, that is part and parcel to upending the stranglehold of the global not elites or the powers that should not be, is that they're going to have to tokenize if they want to play ball in the future. And as more and more assets and activities get tokenized into trustless settlement layers and smart contract executions, their ability to manipulate and commit fraud, waste, and abuse is mathematically gone. So there's a lot of positives in looking forward. And mind you, we haven't had a Enlightenment Renaissance style period in the United States in a very long time. Call it the 50s after World War II is maybe the only period of that. And all of the Web 2 tech, that was all on purpose and planned, right? If you look up a list of all the IPOs in 1999, there's not even 1% of them left, right? And that's because they became these quasi, government, corporate, fascist oligarchies.
Right.
Well, when you get to that level, Tom, what happens in history? You only get chipped away at, because once you get there, that's it. That's the highest. Right. That's the highest.
That's it. Once I remember the argument back in where I was chatting with a guy that I was working with back then in 2011. They said, when Intel's gross margins were 72%, I'm like, well, where do you go from there? Down. You can't go higher than 72% gross margins in the chip industry. Eventually, you're like, and so it has to go down. And eventually, and Intel is a perfect case study of what that looks like, of a company that had been chosen to be the leader and had been given every opportunity to wall off competition because of how the government picks the winners and losers and all the rest of it. And then they spent, and all Brian Krasn's did as CEO throughout the first half of the teens was to buy market share through marketing subsidies to the rest of the industry. Meanwhile, their chips were losing. They were winning the battle on the desktop and the data center, and they were losing the war in every other aspect. Apple's eating their lunch on one end. AMD is now eating their lunch in the data center. I'll be honest with you, I don't even see a future for NVIDIA as well. But that's another discussion for a different day. I mean, the point being, it's just to your point that, when you reach the peak of something like this, and we're talking now, I will be honest with you, this is peak technocratic tyranny. Okay.
Correct. Yeah.
With the opposite, it's when you get there, that's what spurs everybody to go, I don't want to live like that. I'm going to do something different. And, Bitcoin has, I've always looked at Bitcoin as the catastrophic mutation. I don't know that it's going to be the thing that is that which wins, but the mutation of Bitcoin is the thing that sets up the winning.
Well,
It
but
doesn't matter if Bitcoin wins or not. What matters is that it's indicative of the turn.
just like I said, the dollar already collapsed. Bitcoin already won. Bitcoin already won, right? How did it win? Because we know, you and I, and many of our friends know that it could easily be set up in a mutually white labeled wallet to settle commodities contracts between producers and buyers and governments so that you don't have to worry about what proxy war is on my doorstep if I don't play.
Right.
So it already won because it's in the collective psyche of those who know. And maybe it's, I don't think it's appropriate as a currency, although the transaction speed currently would suggest it could handle that. But because it's so scarce and it's such hard money, scarcity and fungibility makes hard money. It ought to be collateral and settlement. The whole world has what did we needed the whole time? Full reserve banks. It could be in fiat that made things better, but we're fractional reserve at best, if not negative reserve. And here you go. You've got this wonderful thing to just keep everybody honest.
Mm-hmm.
You know?
And if we, and again, and then it's a transition from maximum dishonesty and maximum lying and minimum price discovery. It just, you got to realize, folks, that if they go for if they go for the last bit of our humanity, they're going to lose. Because we're just gonna become turtles and go, okay, come find me and come get me. But what are you gonna do? Well, at some point, when there's more enforcers than there are people to be enforced, the system collapses. When it's not a sustained. This is an energetic argument. This is a second law of thermodynamics argument. It doesn't matter how you put it. At the end of the day, we win by doing nothing. You win by not complying.
Well, and that's the peaceful way to do it, right?
Agreed.
The more people, and not to get new age or transcendental on you, but the more people have prepared mentally, spiritually, physically, and financially, the more their ability to affect anything declines. And it's a direct correlation. I mean, if you think you are a slave, then you are a slave. And I think all of these dialogues, right? And you're a wizard at having a lot of them. It's uniting everyone. Like, it doesn't matter if you're a yogi or you're a Wall Street banker or you're a Russell Brand or a Ben Shapiro or Rand Paul or my favorite Thomas Sowell. Like, he doesn't get enough press or
no, he doesn't. He's just that cool.
Accolades that he deserves. I think he's the greatest economic mind of the last. Let me go back to at least the last 70 years. Like, go back to the Austrians with Hayek and Mises and Rothbard, at least since then, if not before. And then, realize that the state is everyone's enemy in all cases. But if we're first conscious of that, then, how long did it take for the British Empire to fall down? A couple hundred years. How long did it take the Roman Empire to decay itself? Well, 400 years. This is not going to be.
No, it's not going. It's going to be a slow replacement process, but we have to understand what it is we want to replace it with, and that's what we're beginning. And I think we're beginning to realize that that's what we're, and all of these systems that are in place now are temporary. And I even look at China's state capitalism, Russia's state capitalism. These are systems that are temporary for them. Okay, they're not going to be this way forever. They are doing this as an abreaction to to what's happening in the West.
Russia and China, they're two, and you're a better expert at geopolitics than I. I'm not an expert at anything, let alone geopolitics, but I view Russia and China through two different prisms, Tom. And you could correct me if you think that's wrong, but ask me which one I'd rather live in. It'd be Russia, right? And I think that the economic alliance recently was, as you said, in part forced by the West, in part forced by the fact that the Fed went and took how many billions of Russian people's money via SWIFT? It was 207, right? Or
Mm.
270? I
Yeah,
forget the exact
nearly
number. I
300
don't have it
billion.
in front of me. What did they send to Ukraine? Wouldn't that be ironic? Anyways,
Yeah, no,
whereas Russia's not trying to be masters of the universe, and Russia does not go around destroying entire ecosystems as ad nauseum for the temporary commodities supply. So
mhm.
there, and to me, it's not fair to group Russia with China. To be very
No,
honest,
it's the idea is that they are civilizations first and systems second. Iran, China, Russia are civilizations first. They have a civilizational identity. I've talked about Joaquin Flores about this. I've talked about Alistair Crook about this. A number of people about this, and we all come to the same conclusion. They are just they're civilizations that adopt systems as needed with each age of history, as opposed to being systems that react, willy nilly. We're still a system oriented society, and this is our problem. This is part of the reason why we're having to go through this process, because we don't have enough history. We don't have that kind of identity. I think Americans can get there if we want to, but it's a question of whether we want to or not. And clearly, there are factions within the United States that don't want to. They're ashamed of being American. They're ashamed of being who they are,
yeah, but
and
we
that's
got
that.
to forget. I mean, I've always advocated for being a little bit more tolerant, nicer, because those of us who are in the know, it's our responsibility to be able to
Agreed.
break down personal, pragmatic, and political barriers with logic, reason, and fact, right, and history. So empathy. It's harder to come by in certain vintages, especially the older generation, because the baby boomers, no offense, literally from a crime, collusion, corruption, and debt bombing the planet. They're the worst generation that's ever walked the face of the planet, in my and have had more genocides than Mao, Stalin, Hitler combined. If you add up all the proxies
Mhm.
and all the vaccine deaths and all this, that, and the other, and then okay, if we're cognizant of that, how do we usher in a higher consciousness? It's by offering empathy and then saying, look, you really want my kids to get their genitals cut off? You really want to abort 2 million babies a year? You really want to have everybody living paycheck to paycheck, and the terror and the frustration and the anxiety that brings? You really want people to be eating poison every
Mhm.
day and sprayed in the airs into the water? I mean, the rational thing is no. Okay, well then we're all on the same side.
We're on the same side. Like let's just agree that like we're not arguing these ideas from a purely philosophical framework. They exist in a there's a pragmatic and practical. You can have your philosophy and and then present it to the world, and it may not be reflected in policy as you see fit. That does not mean you have to act in accordance. You have to like the policy or whatever, but you can accept some of the terms of it and then still act as if on your own principles, which abortion is, for me, is a
No,
perfect example. It's like, look, I think it's abhorrent. I think it's murdering children, but that's on me to implement that into the world, to implement that version of reality. And that does not mean grasping for the brass ring and pointing guns at people and say you can't have an abortion. What it means is that I figure out as many ways as I can and affect the world as positively as I can, so that women voluntarily make the choice not to murder their children. That's the limit of my capacity as a human being. Now, take that model and put it every freaking where. Like, it's not tough.
well, and people don't respect and understand, Tom, the decay in values, and accepting abortion as a legitimate birth control policy is a decay in values. I'm all for body autonomy, including not getting a vax mandate,
Mm.
or any type of exposure to chemicals, whether you're in unfortunately Maui or you're in Ohio,
Mm.
because those people are experience mandated chemical exposure, um, and it's a byproduct of money printing.
Of
When
course
you
it is.
print money, your values decay. And like I have a lot of
Corrupt money begets a corrupt society, Chris. Been saying it since I went since I typed the title on the blog and said, what am I going to call this thing? Gold, goats, and guns. And a corrupt society or corrupt money begets a corrupt society. It's where we are.
you can go,
And
hey, it's not about money, it's about control, and it's about agenda. And people don't, they just anchor to these axioms so quickly with such vitriol that all you have to do to disrupt it is give a little empathy. Go, hey Tom, I know you're get the government out of the doctor patient relationship, but
right.
what if we took the money out of it so that it could be just the doctor patient relationship?
Yeah, wouldn't that be nice?
That makes sense. Yeah.
Wouldn't that be nice, right?
Mm-hmm.
So but the thing is like, what's the other adage is, what's wrong with money and the problem with politics is there's money in politics. I'm like, exactly, there's money in politics, so take the money out of the politics and all of a sudden there's no problem with politics. This isn't difficult. Like, the thing is here that we have to realize that these are processes to go through. So when I sit here and I talk about, and I'd like to finish up because I'm beginning to lose the plot here. When I talk about the Fed normalizing rates as a fundamentally as a good thing, I mean that in relation to the zero bound, because now we're actually making money have some opportunity costs associated with it. And that's the risk of having to go buy it at 5.5% in order to try and turn it into 7%. Like, this is the reality. That's what 5.5% money means. I know we can argue how many Rothbards dance on the head of a pin as to whether or not there should be what the money should be made out of. No argument. I'm with Murray. Money should be made out of something trustless. I agree, but we're not there. That's not the world we live in. And so can we please look at something? Even Murray would be sitting here if he was here today, be sitting on my shoulder going, yep, voting for the guy that's going to raise interest rates, because we know that the zero bound is wrong.
Well,
at the zero bound,
tried that in 18 and got just lambasted.
Because the world wasn't ready for it yet, because we were still on LIBOR. And now that we're not on LIBOR, we have that. I make this point all the time. And now that we're not on LIBOR, we're on SOFR. That changes the dynamic completely, because now we have our own debt indexing rate, and with that, we can now determine the value of our own dollars.
And people don't understand mechanically, Tom, how important that was, as you just articulated. And then I'm going to argue your point for you. Is like, when debt's zero, you make flagrant and stupid decisions, right? When you got to pay 7, 8, 9, what happens? You got to make smart decisions. It's a default.
Yeah, absolutely. It's just simple.
That happens. And how are better decisions bad for people? Oh, wait, they're not. Now, yes. Could we have an asset deflation, revaluation, debt bomb of whatever? But guess what?
Sure.
Tom? 95% of the planet doesn't own any of that shit. If it goes to zero, they don't fucking care. So it's not going to be this.
Who cares about the deflation of asset prices? The people. Yeah, exactly. They're the ones screaming. They're the ones screaming for the pivot. They're the ones that are like, this is not.
Wait, Tom, we're going to have stakeholder capitalism now because we're going to dictate terms, and you're going to own
communism. Shut the fuck up. Like, it's not tough. It's not tough. We're going to have fairer capitalism. What's fairer? What's fair? That you stole all the money? We never had capitalism in the first place. You people stole it all. This was just toll boothism.
Look,
it's all it was.
You get it. I get it. And I hope there's more of us that, reach across and speak to each other about it. Because again, not to be a hippie, but the higher the consciousness, higher the frequency, the more we literally, as you said, need to do nothing but not comply. That's it. That's it.
It's that simple. And Bitcoin is a version of that. Gold is a version of that. We shouldn't be married to the individual mechanism by which somebody decides to not comply. We should always and everywhere just reward them with our goodwill for when they decide not to comply. It's not a pissing contest as to whose thing is better than somebody else's. That's a false divide. That's a false division. That's what they want you to do. You don't think that they try to seed the idea into your head that Bitcoin was better than gold, so therefore, like, shut the fuck up. At the end of the day, someone chooses gold, someone chooses Bitcoin. Be smart enough, if you're a Bitcoin guy, to go, yeah, he likes gold. More power to you. And if you're Peter Schiff, shut the fuck up. Bitcoin is fine. Like, I'm done on both sides with these people. Like, in every way, religious fundamentalists need to stop it. We have a bigger problem, is to get rid of the friggin' paper hangers.
It's that fundament, religiosity, fundamentalism. Now, granted, everybody's running a business, so they need to create a demand for what they're selling. So I have empathy for that. But like, let's look at silver.
Don't lie
if
to
it was
people.
a demand. Well, if it was
supply, but the first rule of business is you don't lie to people. Like, seriously, I'm sorry. I'm calling it
because of printing money.
He's lying to people.
He is, but it may be both. I'm not going to defend or not defend.
Look, you don't have to. I'm not asking you to. This is my hill to die on. I don't give a
shit. Here's how I will agree with you. If demand and supply had anything to do with the price or an input to price, silver would be a zillion, right? Why? Well, is there plus or minus more stuff in industrial uses versus its $50 high 20 plus years ago, or its $22 current price? Well, I think industrial production using silver went up thousands of %, yet the price didn't. So, that undermines the argument for those fundamentalists. Does that mean I don't like silver? No, because only a freaking idiot would not go, hey, that's cheap savings. That look, it's coins, it's bars, and hey, worst case scenario, I pumped whatever % of my net worth into it over time, and my bloodline has it. Cool. That's a no lose proposition.
Yeah.
So I can't tolerate.
It's not always about making the perfect trade. Like, I get the anxiety of, and this is, again, I can riff off of this idea for another 30 minutes. There's so much anxiety because we live in such a tenuous environment. We're all holding on like, moss on a rock, and the hurricanes coming in, right? Like, I get it. I'm no argument, but at the same time, make good decisions and make a variety of them. I've never said to anybody now it's almost 7 years I'm doing this. I said, look, you like gold? Great. You like Bitcoin? Great. You like silver? Great. You don't like silver? Tough. Buy some anyway. You don't like Bitcoin? Buy some anyway. You don't know if you're going to be right or not. Don't be an asshole. I'm an asshole. Don't be an asshole. Don't be doctrinaire about it. Buy a little of everything. When one is cheap, buy that one. When one is high, sell a little bit of that one, and then and then put it in the one that's undervalued, and then keep rebalancing. This is basic portfolio management. This is not tough.
When the alpha from rebalancing to 2 standard deviation moves up or down, and maybe on a yearly rolling period, if you take 5 buckets, right? Maybe a maximum of 8, because you don't want to have too many buckets, right? And it should all be under the guise of accumulation, right? It increases your alpha by 30% per cycle, just by yearly rebalancing. And
there you go.
Now, obviously, if you have, I'm going to have marijuana stocks in there in 2022. Okay, they went down 90%, but I'm saying broadly, like,
yeah, I mean, okay. in general, if you pick, and this is why we're going back to the beginning of the podcast, and I'll wrap it up here, because it's a very good point, Chris. It really is. It's like, look, dovetailing off of this, which is that we do not always have to make perfect decisions with our.
Well, it's not even possible.
It's nearly impossible, right? So if you spread yourself across a number of asset classes, and then remind yourself that we live in a highly politicized age where everybody's lying to you, okay? And you look for those folks who cut through that noise to give you a coherent narrative of what's actually happening. Then you can have, if you've got 5 buckets, you're going to hit in 3 of them or 4 of them, as opposed to 2 of them.
Mm-hmm.
If you hit in 2, you're going to lose money. If you hit in 3, you're going to make money. And if so your choice here, you can split up into 5, 6, pick your number, and then do the best you can. What we're all trying to do in this space is we're trying to bat 1,000, but you're not going to bat 1,000. So you're going to make, but if you bat 700 and you rebalance properly, you're going to make a ton of money. And that's a wealth transfer away from them who are trying to bamboozle you into losing money so that they can steal it from you, because you're the Muppets that need to be fleeced because you're just a virus to them.
Like, people need to be understanding, and a lot of people, I'll pick on the financial planning types and financial advisors. Those people aren't worthy of making investment decisions for or with you in large degree, because that's like saying, I'm going to go to my auto mechanic for my hip replacement, right? He may know how to jigger with things, but he's not qualified to do that. And so I think people should really find representation that is worthy of their time, worthy of their trust, and is not greedy. Because having 8 sector mutual funds is not what we're talking about. We're saying separating fiat derivative asset. Okay, here's stocks, bonds. Here's commodities. Oh, is it energy? Is it metals? Or is it all of the above? Am I buying spot? Am I investing in hedge funds? Here's crypto. Oh, I'm buying crypto. I'm investing in hedge funds. Here's private equity. Here's venture. Here's real estate. Is it commercial? Is it residential? Is it both? Those are the ways you delineate it, more by strategy than by, I have staples versus tech sector. That's not what we're talking about. We're talking about what I just laid out. And then the reality of it is that both ends are getting gaslit. So the advisors or traders don't want to step out and get sued by recommending something not Wall Street or Davos approved. And then the people don't know to question it, because it's, hey, look at Tesla, look at NVIDIA, look at Microsoft, look at Apple. Well, wait a minute. There's 1,000 stocks in the Russell 2 that are trading at like 7 times with a 4 yield that maybe I should take a look at.
Right.
So people need
as David Hayes said to me over the summer, oil majors are trading with a free cash flow yield of between 14 and 16%, depending on, and the bad ones are trading at 12%. Free cash flow yield. Like, guess what, dude? Like, there's no argument. Like, buy them and just walk away.
But Tom, you're not allowed to, because that's not ESG. And then, wait a minute, Exxon looks over.
Yeah, it is. I mean, these are oil majors. You're allowed to buy oil majors. Well, I mean, it's not ESG. Well, now, we are now because ESG is now over and done. So, Chris, I think we should leave it there, and we'll pick it up. And you and I will pick this up again in 3 or 4 months, and we'll do it again. But this was a blast, and I really enjoyed it. Anything else you want to say on your way out the door?
For Q4 in the charts, we're going to get a retracement in yield. Like, I think the yield curves have peaked. They're going to say exactly what you just described with the bond vision. Oh, look, they were wrong again, blah, blah. We're going to get a natural retracement because we have an impulse down in rates. And then, all hell could break loose after that. But that's a multi-quarter process if it at the soonest. And people need to, get their house in order, trade what's in front of them, and try to be a more responsible investor.
Yeah. The big thing is, I would say, deleverage as much as humanly possible. That's what Powell wants you to do. He's making it abundantly clear that's what you need to do. And he's willing to pay you 5.5% for you to do it. So why don't you, hey, everybody, don't fight the Fed.
Get some of your tax money back.
Yeah. Don't fight the Fed. Take 5.5% on 3-month money and call it good. All right, man. It was good talking to you as always. We'll do it again soon.
Thank you. Appreciate having me.
And we're done. Well, that'll about wrap it up for episode 155 of the Gold, Goats, and Guns podcast. I want to thank Chris Sullivan for a lively discussion as always. We had a little bit of a weird technical thing, which took me a while to actually edit this one together. But I got through it, and we finally got it off the door. And again, want to thank Chris for both his time and his attention and his diligence and his patience with some of the things that went on. So with that said, I'm out. As always, you can follow my work over my blog over at tomluongo.me or goldgoatsandguns.com. You can follow me on Twitter, where the very worst version of me will show up on a daily basis. I guarantee it. At TFL1728. You can also follow me on and sign up for the Gold, Goats, and Guns Patreon, where you can get access to the monthly newsletter and or the morning munchings, private blog posts, and the market reports that happen every Wednesday and every Sunday. So with that said, you guys be well. You take care. We'll talk soon. And keep your slick on the ice.